Welcome, everyone, to another episode of Inside Traders, where we talk about what the big banks are up to. We pull back the curtain and look at the inside trades of not our brother Jerome Powell. How dare I talk about inside trading with him on the screen? But these guys, the true institutions, big bankers, and smart money, basically, because they know what's actually happening. And on this show, we look at their trades and basically copy whatever they do because it makes money, but not all the time, as we'll find out. And really what this show is about, it's about learning out loud and trying to become really good at not just being a trader, but being an options trader. And I think as I discover more about what that means, first of all, it's something that I'm interested to share as I learn. But what's interesting to me about markets is a lot of the trading volume, by a lot, I mean like all of it, is happening in options. And so like normal people like you and me, we would buy stocks, right? Like you buy a stock and then you're an owner and you have a share in a company. It makes sense. An option, like derivatives, all this crazy stuff is like for the professionals. But that market, first of all, only opened up in like the 70s or whatever. And so it's like a brand new market. And traditionally, it's only been available to these guys, people that are putting in, I mean, look at the premium here, 4.2 million into, that's a great premium. So somebody today put, okay, so this is like a hedge in like this is a very valuable put they just did. So basically they bought the 440 put. How much was that? What's the price? Yeah, 210 bucks. Yeah, it's like 20 grand. But the whole premium was, I mean, that's per contract, by the way. So they put 4.2 million in. So anyway, I'm telling you what the show's about. So we want to learn how to trade options because that's all the market volume for a reason. And then not only that, we want to learn how to trade 0-day options because of all the market volume, which is options, all the volume of that options is happening on this week's expiring chain. So like everyone's just trading, you know, like this week's chain. I mean, we can look at it let's look at the Tesla volume. So this is every put and call on Tesla today. And the highest volume was, yeah, you could just see all the high volume is expiring in 4 days on Friday. So boom. And what is it? A lot of puts, a lot of calls. So we want to learn what is a put, what is a call? How do you make money when the market goes up? How do you make even more money when the market goes down? And I don't claim to like have every answer, but I'll tell you what I do have. This guy, his name is GDT, Gamma Delta Theta. He's artificial intelligence. And yeah, like we ask him stuff on the show and we learn. One of the interesting things that's happening right now is the 10-year yield is, I had this up, is actually at like all-time highs back to when? What? Yeah. Okay. That makes more sense. 2008. Whoa. Damn. So what does that mean? Well, GDT claims that it could be a sign that people are afraid of a resurgence in inflation, which, you know, I didn't even know how to analyze that. But I do know that no matter what happens, these traders are going to be like throwing premium into companies and we're going to follow their trades on this show anyway. Not really claiming to know much about like anything other than there do seem to be some tenets to trading that seem like actually real and reliable. One of them is technical analysis. Like if you look through the charts, they do provide a history of any period of time, it can really be just like a minute. There's so many transactions happening. But any period of time, you can kind of look at it. And so I had these bars, like this was important to me at some point earlier. What? Yeah. Anyway, I mean, so this tells a whole story. So Friday we closed with this giant red candle just to like make sure that we're scared and won't buy. Thanks. Cool. So like that's what we get on Friday. Yeah. Let's even make it bigger. This candle, this shaft here. But then they say these hammers are bullish. And to me, they kind of look like they are like shooting up, like fucking breaking through the wall. I don't know. But we do shoot up. We gap up, I believe is what it's called. And which basically means that now we got duty. We got gap duty. Or you could say we got gap opportunity, right? Because we could look at this in the future as we're getting close to 220 again. And we can wonder if we're going to test this gap. And if you do wonder that, maybe you buy some puts $5 lower. And if you look at a lot of the option volume on Tesla, look at this most traded contract here. Huge volume, huge interest. And another one here and another one here. These are puts that are trading for pennies and they were just purchased today. All of these contracts just fell by like 70%. And so the question that everybody would love to be able to answer, which nobody can even give a whiff of a fart of a noise of a hint of anything to, in the wind and it's gone, whatever that is. I just said a bunch of bullshit. But like that nobody can tell you what the price is going to be tomorrow. Nobody knows, nobody can know. And so going to the dark pools, what we can do is we can look at indicators and signals and sentiment in our own histories and experience and the collected wisdom of people like Nassim Taleb. And I haven't met a lot of other people interested in options trading or, like read books from people interested in options trading. So this is pretty interesting stuff on Tesla. Look at this print here. Oh, I guess I already had it up. So $170 million of premium, but there was an even bigger one, 221. See, this looks like a call. 221, where were we? 221. Let's go a day. So it doesn't even show up on the chart. Yeah, anyway, it's lower than we are now. We're higher. So somebody is putting in 170 million right into close, right? So the level, you can see the purple line. Nice. So right into close, somebody dumps in 170 million into Tesla. That's a lot of cash. First of all, like that's a lot of premium. Okay. We can just respect that as a signal, and it'd be nice to be able to, even create signals from the history of that signal. So what do we think that we don't have any information on this dark pool because this is like international money or whatever, like just people, I guess, pay for the privilege of not having to have everyone know your trades. And maybe it's so it doesn't move the market and stuff. So 170 million of premium right in a close. Is that a bull call? Seems pretty crazy. Lot of fear right now in the marketplace, and like I don't know, a lot of fear. Or is it a bear call? If you look at the price action after the close, you would almost wonder if it is a bull call. Look at this. Where are we trading at? 232. So whatever, like GDT can't talk yet, so he can't do the math for us. But until now, you can just see that that's nice and far from where we are. Boom. So that looks like a gap. Boom. So we closed at 231. It's almost 233. A little exaggerated. Take out 50 cents. So yeah, like look at this stuff. Look at this stuff. Isn't it neat? It's just celebrating Disney, just celebrating the release of Little Mermaid. So, um, first of all, look at this gray rally and this bar. Boom! That is like commitment. Like somebody is taking a position right there. Um, but then you get these sellers, and selling is interesting. I mean, I think you actually really do want to be able to sell naked calls. I think you have to be able to sell naked calls. Otherwise, you can't really defend yourself quite in the same way, or attack. And like each option gives you an option, right? That's why it's called an option. What is it? It's a contract. It's an agreement upon a specific outcome over time. And so basically if you're like the buyer of the contract or the seller, whatever, you're both agreeing, you're both basically saying like at this point in time, under these parameters, which is like the strike price, you're basically saying, I think Tesla is going to be $200 in a month. And then the other guy's like, I think it's going to be like $300 in a month. And so like one guy buys a put, the other guy buys a call. And what they don't tell you in option school, if there was such a thing, is that you can always use the equity of any of your puts or your calls to sell more puts and calls along the chain. Obviously there's like, you have to unwind these things if they go wrong, and you could have a total loss of capital. But like the point of why I think all of the market activity is happening in options is because they are so versatile, and their outcomes and their uses are so varied and magnificent and many. But they can really burn you if you're wrong. So anyway, like all these charts, technical analysis tells the story. So we could just look at it where we closed. Let's draw the line, move the line here. I bet it's going to line up to stuff. Just get it right there. Next to the Bollinger Band, which I love to say. So where are we at? So yeah, instantly intersects where, okay, not that clean, but a little kind of, we can see it's like a bottom here. What is this? The 16th, couple of days ago. Oh, so this was after a gap down and then a strong red candle up. Was that the lower end? So basically you can just look at where we are now, right? And then you can zoom way back and you can see where have we been over time. And in the comparison of those things, each period will tell you a different story. And especially depending on what like time period you're trading for, because that time always matters in options land, because all your contracts are always expiring. And that normally works against you unless you sell calls, in which case it works for you. And so you actually have a gain from theta decay instead of a cost. So look at how these bands are so wide. So this is like the market saying anything can happen. We're just going into tropes and old shows on this show today. This Lego movie, if you didn't get it. Look at this, gap up, but boom. I mean, they get you. They do get you. But there's always going to be a time to buy. Like you never really have to, this is something my experience has taught me. You never really have to chase anything. You should just do your best to like acquire as much ownership as you can with as least capital as possible, right? But easier said than done. So what level are we at? 2 hours. Let's go back a little even further. That actually was pretty far. Let's go back here. So, wow, look at that. See how things line up? There's a lot of symmetries in markets. There's a lot of patterns and a lot of symmetries, which you see if you just look through the history of stuff. So yeah, like these two bars, is it a coincidence that over time they're always intersecting these events? Not like perfectly or whatever, but you can see patterns. And no, it's because there's a lot of market events at that time, and there are people that decide at that level they will be a market participant. And so we see more volume, and then the price changes. So Tesla, we were looking at order flow. Like, I'll show you what they're buying. Tesla and NVIDIA both had a face-tearing rip to the upside. Yeah, like both up 8%. And I've been testing out like an idea of like how to hedge. Wrong day to do it on Tesla, but actually showed the way it could not be super expensive and still be effective. And so we got NVIDIA with a ton, 81. Yeah, like this seems like the truth to me. Oh, these guys are selling calls. See, I want to see buying puts. This is selling calls ahead of earnings, which like if you have shares, you definitely should be doing. I don't know, maybe you shouldn't. Like it could gap up, right? If it's, when is the NVIDIA train gonna, derail or whatever? Last time I had an idea that I have been thinking about, and let's go to the NVIDIA chart. So this is the same as Tesla, where they get us on Friday, but then we still see that there's that red thing that's shooting up. And so we do shoot up, boom. And then we're kind of trading along and it picks up. Because how people are looking at this is right after there's a big move, they want to see what the level is going to be after that. They want to see a minute after, 5 minutes after, an hour after, a day after, a week, not a week, but like they want to see follow through. That's what you're looking for, is follow through on both sides, on the sell side. Like when do you know when to hedge or whatever? When they're following through. Yeah, like when they're breaking through previous price levels. So now if we look at NVIDIA, look at the tip of that, bum, 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 something to celebrate. Wow, to be an NVIDIA shareholder, I'd be celebrating. Look at these giant, oh look, that just looks like a setup for more. I want to buy NVIDIA. Mm-hmm. So the it's got to go down to 320, 330. You want to know why? Because this is all untested. So all we know from all I have been able to glean, which is very little over not much time, but still I'll share it with you, is that the markets are looking for an excuse to retest previous price levels. And when you're forging new ground, that's fun. That's exciting. And just every penny is like pure premium or whatever, pure returns. But at some point, be it from a market disaster or a company disaster, like bad earnings or whatever, not disaster, the market is going to look for an excuse to retest price levels. And it might happen for like a blip, which is exactly what we saw in ARK so far. We'll see. I'm not even at all believing that the selling is over. Who knows what kind of environment we're in. That's why we go and look at the order flow to see what people are doing. So I think this is the candle we're looking for. Yeah, the low on this candle, just take a look at that. It's the green number up at the top, 39.32. So this is why these technical guys like probably make money, is because that's the 200-day moving average, which obviously you're going to have a bunch of pre-trained algorithms triggered to buy on that 200-day moving average. And because they're patient, they wait. And when they get the trigger, maybe that just issues a buy, maybe that issues a buying program. I don't know. I have no idea. I would imagine that there are buying programs. And so like if there are such a thing as like a sustained increased volume of buy pressure or sell pressure on either side, because if we pierce and stay below, then that's going to trigger the other algorithm, the one to sell. And that's why all this stuff is kind of like so a little bit predictable. not predictable, but like there's patterns. There's patterns. Look at, we just love seeing all that green. It's just like good for the brain. So yeah, then we're kind of like in arc. I wasn't watching super close. Wow, tight consolidation. That is kind of when you want to buy. Oh wait, maybe that's not quite the view. Um, I think when these bands get narrow, I do think that is like a pretty good time to buy. So then on arc, where are we? Boom. Yeah, like we had that low candle of like whatever it was, 39.32. And then we've had two consecutive closes in the green. Now, counter trend rallies, like that was bound to happen. It's literally gone down like every market session for like, I don't know, a month. It's been crazy. Um, and then you still see though these really bearish bets on ARC. And you can better believe if ARC penetrates that 39 level at any degree, it's going to be a cliff. It's going to be a cliff. And so like I think the shorts are like licking their lips, right? Like they are hungry for that penetration. And so what they do is they attack it actually with a debit, I feel. I don't know if this is true, but I don't think the effect on their position is a sell. I think they're buying a sold call, like a naked sold call. I don't know. But it seems like the shorts are able to provide a ton of downward pressure. And the reason I think that makes sense is because the buyers need a reason to buy. They actually need a reason to buy. And so like if there's no reasons to buy, then the buying volume will be present, but it'll be kind of dried up. And that's when the shorts go and they start trying to penetrate. If I was doing it with like billions of dollars, here's what I would do. I would systematically try to look through different price levels and figure out where there was support. And then I would just do crazy selling right at that level until we penetrate it. Because what if we can penetrate it? If we can just penetrate one level, then we can get the algorithms going. Then we can keep driving the price down. And we just let the algorithms and time do the work. And because we're benefiting now, right, from that positive theta decay in the sold call, as opposed to like the opposite. When you buy a call, usually you're in one of the risks is time decay because it expires, so it's not going to last forever. You buy a share, that's the same as a diamond, lasts forever. Option contracts all expire. So man, yeah, like we did see some bullish bets on ARC though, which funny enough is already underwater. And it did seem like kind of a risky bet. But yeah, anyway, like I was saying, you get these sellers and they start analyzing the charts. This is what I would do, and finding these key price levels. And then you just do like tons of selling right at the level until you penetrate it. Because once you penetrate that, you get locked in there. And you don't get unlocked until the buyers burst back through. But the buyers aren't going to be there unless they have a reason. They have to have a reason. And this is why I think it behooves us, if we want to just not print, but like if we just want to make cash. If like the purpose of what we're trading for is to generate immediate returns, then why not always trade with the momentum? Always use that cash to build up your long, portfolio, certainly. But in your trading efforts, like look at what the order flow is doing and do that. No, it's not like it's that easy, right? If you were to look at NVIDIA, it's the most, it had the most bearish. So, see, this is kind of actually inaccurate. This is not accurate. It's not accurate to say that selling calls is the same as buying puts. Like this is a form of like, first of all, they could just be wanting to like hedge, which is an appropriate thing to do, and capitalize on the IV, on the drop in implied volatility if there's a decline. And what they're risking is like, yeah, some upside. But what I want to see is just maybe we can look this up. Let's see if we can get, let's go to tape. This one, boom. And see if we can get NVIDIA flow. Oh, I already have it. Yes, see, boom. So if you actually look at it from this dimension, which doesn't include sold calls, then it was more bullish than Tesla. And look at all the unusual action on Tesla. Right into close. Look at this. Right into close. Right to the second of close. So what are they buying? Yeah, everyone. Hey, it's all this week. It's all this, and next week is the expiring options. Drink Coke. So, yeah, these are like, I think a lot of them are run through automated systems. So basically, the volatility of these contracts, it's insane. They can go up 1,200% in a day. Now they can go down 99.9% in like a second. That's the risk. So I really think like these people have systems that they're trading through, which automatically take returns, and maybe once they exit their money, they let some ride or whatever. I don't know, but the point is, there's no way people are just like making these unhedged, crazy, same week expiring bets. Or maybe they are, but I'd like to know. I would like to know how it works, because it's very easy to get burned on these. Just to restate in a simpler way what the point I'm trying to make here is that it's interesting to me that of all the market volume, it's happening in derivatives and options. And of all the options being traded, they're being traded in the riskiest bets possible. So even simpler, all of the bets being placed on the market every day are the riskiest bets possible to make until I can find out otherwise. That's how it looks to me. So I think it's interesting to me that the vast majority of trades that people are making have the most risk. But I think that's probably because they have the most returns, which makes sense. And so then the question would become, well, how did these guys make those trades, make these risky trades? And it's not like they got an instinct. They got, I think, a program. And so we want to figure out how to trade like these guys, basically, is the goal of this show. And one of the things I was just talking about is like, going back to charts and technicals and all that stuff, is like, for real, just like, what are they doing? Just do that, like they weren't actually bearish on NVIDIA. They were bullish. And so like the price action almost always follows the flow. Not like 100%, not 100%. But yeah, it definitely did on NVIDIA and Tesla. Even Apple's probably selling calls, right? Yeah, boom. These are sold calls. Is there a way to like exclude that? Let's just see ETFs for funsies. IWM, yeah, I sold. Anyway, I do think that it would be cool to see I'd need a little diversity in my portfolio. So what are these, sold calls? No, puts. Yeah, see, we're putting SPY. We're putting QQQ. That's what I want to see, puts. I want to see puts. So KRE, it's getting some, I think that's regional banks, gold. What else? Nothing? No ARC. The bearish action is actually on ARC. That was one of the highest print in the markets today, was a bet against ARC. Let's go see it. is this sorted by premium? Yeah, so we started with this, right? The Tesla put, the 420 Tesla put. Cool. So, like, we like that guy. So, yeah, ARK, look at this. This is it. How much is this? $1.1 million bet. So they bought the $38. They were betting that ARK was going to be $2 lower than it is now in a couple of weeks, and they paid 90 cents per contract. But they bought 12,000 of them. That's crazy. And so they've already lost like 30% of that. They've already lost like 300 grand. I'm sure they sold, but still. Apparently, people use stop losses. You know, they might. I like using our brothers in the hood. Have you heard of a stop loss? Wow, that should be a default setting. Anyway, like there are behaviors that option traders use to protect themselves given the volatility of their contracts, a lot of which can be automated and simplified to basically help you hold on to your money when you're playing with such volatile contracts. And so look at this call, $2 million of premium into NVIDIA, and they're saying by December, $485, $30 above where we are. Like, that's a big call. I don't know. Like, how can you make that call? Like, NVIDIA has been, anyway, it could happen. It could double. NVIDIA could double, right? So yeah, one of the highest premium prints was against ARK. That's funny. It's so low, but I'll tell you, you want to know what would be, where this would pay off big time is if we went down from here. They're underwater because they already bought it at 40.50, and so they maybe bought it as a hedge and sold it a second after. That's maybe what happened. We don't see the other side of the trade, although maybe we would. No, because you would sell it to different buyers, and so anyway, on ARK, if they penetrate $40 for like a nanosecond, that is going to trigger every algorithm in the universe, and it is going to be a free fall in the universe of ARK or whatever, of NVIDIA, of like, how does NVIDIA get tested in the long term? Something like there does have to be a reason. And so it could just be a lot of selling pressure and no reason to buy. Like, that could be it. But in NVIDIA's case, that has so far to go that it's hard to know what's going to happen. And it's not like I have like enough experience to, really like postulate on it too much. But the one thing that I'm pretty confident in this, and this is kind of interesting, is anytime we have like some price history behind us, I gain confidence in that. And to me, it makes sense that we can go up from there, because there's a history of people buying and selling. Somebody was willing to sell it. Somebody was willing to buy it. Like, there's always somebody on both sides of the trade, and all of that is information. All that buying and selling information is how we set the price. And so when there's a history of that buying and selling, you can have at least like 1 degree of assurance that you're on more solid ground, because the assumption should be that the market wants to retest a lower price. So then you come back to like 2018 on NVIDIA, and you're all the way down to $69. And like, if you look at these gaps at any term, eventually we're not going to go fill the gap from 30 cents to 50 cents on Apple. We're just never going to revisit that gap. That gap is closed. But what nobody really knows is what gaps are still open. Nobody really knows. And I would argue that this gap is wide open. And so I think that companies, one of the luxuries of being a company is you kind of get to like choose to do your earnings however you want. And if you want to take the hit and you're prepared, then you report the bad news. If you want to like get a little pump first, you report the good news. I don't know, like obviously that would be unethical to do that overtly, but I think like in many ways organizations can operate to their own benefit, and it's only better that they do so. So anyway, like this talk about fill in the gap, like oh yeah, the Nvidia bull, this guy, 2 million at premium. Well, like that's a real guy. He's really out there, He's like $2 million, or it's a bank or something, and at a sweep too. What did he buy it at? 453. What did that? I'm not following him close. Wow, he's very up. Did he buy it at the very beginning? Like 453. How did he get that? Oh wow. This is what the insiders. The insiders. Okay, so no, this is a trader. I bet this is a trader. I bet this is a technical guy. Maybe, who knows? It could be anything. I'm making shit up, obviously, right? It's a fantasy. You can't even see what I'm talking about. But he put it in at 453. Damn. So let's see if we can see what he saw. It's just assuming there was something to see. 453. I mean, that does look like a level, right? That's a level. When were we there? Yeah, kind of like a peak of a previous past. So like, here's how it works though. So we like get up here, maybe 453 was like a technical level that we could see through history. And once we lock in above it, see with this candle here, zoom in. I think, yeah, that one. So with this, we break above 453. The bears like break through the glass ceiling or whatever, like the actual ceiling. They punch through it, which was set by this candle in my mind, 454.04. So then we're at 453. Well, that doesn't make sense. Oh, that was the high. So we pierced all the way up to 454.04. And then on this, how can the high be lower on this? Oh, it is lower. Oh, it's just on that interval, on this minute interval. That makes sense. Okay, so then there it is. Okay, so we get all the way up to the high of 455.5. And that triggered somebody. They were like, that's too weird of a number. And so we get some selling pressure. And anyway, they're all this stuff. Like you could just go candle by candle. This is at the minute candle. Like we could do this at the hourly candle, at the daily candle, at the weekly candle. Like we could do that. That'd be fun. I would enjoy it. Because it's all tells a little bit of a history. Look at this. When was this? Friday. This is just like pain for Nvidia. Pain. If you're like, oh, wow, look at that selling pressure. See, I do wonder. I wish I could look at these trades. I want to know if people are buying puts or selling calls. And by calls, I mean uncovered calls. Like, I want to know if people are buying uncollateralized sold calls is what it would literally be. So, like, the actual effect isn't that they are, like, risking their collateral. Their collateral is the cash. And they are basically borrowing the shares for almost nothing. And then they don't have to have the full collateral for those shares. But if if the trade goes against you, then you owe a lot. But then you just like have a stop, if ever there was a stop. So around 420, people are like, we don't like 420. Boom, goes down to 415. Anyway, back to the show. Like, if you want to know, like, this is what I'm saying. I'm not pretending to know anything special about anything. I'm just saying, why wouldn't we look in real time, as in not a 15-minute delay, as in, like, let's build a pipeline into the live trading activity of the market and see every option order in real time as it happens. And we'll just look at what people are buying. And like, isn't that going to give us the most definitive and clearest signal possible? Because at that moment, the buyer and the seller had all the information possible that it was to be known. Now, did they actually have it? Probably not, but like at least they had access to it in that moment. I'm just saying everything known and unknown about the stock and upcoming earnings and like the environment and the macro and the micro, all of it is packed in at the moment of transaction. Boom, stamped. And now, why does it matter that the information is transacted there? Well, I think that comes back to like why people are trading the 0 day so much, and why my motivation is to just follow the order flow in terms of just doing trades and learning how to do option trades. Is first of all, like, this stuff is going to move the markets. Like 109 million in premium of probably puts. Yeah, a lot of those are puts. Exactly. That is going to move the markets. And so if you're taking a position, why would you ever take a position on a day that had the opposite action of your long-term intention, whatever your period is, even long-term, even if it was a week? Like, why wouldn't you just wait until the flow was bullish? Okay, well, if you're going to wait, then why wouldn't you just, like, always follow the order flow? Anyway, I know I'm getting repetitive here, but like, I want somebody in the comments to challenge this idea and tell me why it's not like the right idea. I'm not saying blindly. I'm just saying, like, as you see this aligning with your strategy, then like, make your trade decisions based around that. So maybe don't like buy a bunch of like out of the money call options at the top of the market when sentiment has been bearish for 3 days in a row. Like, there's just no reason to do that. You're like, why not wait for the day next, or whatever, the week next, when the opposite action is happening? Because we know that just like now that we've had this rebound in markets, the real question is going to be, what's the follow through? Does the price action turn bullish into this meeting with our Mr. Jerome Powell? I don't know. I'm just being stupid. But for real, like, what is the price action going to be this week? I don't know. Like, I think there's a lot of reasons to hedge. And the one thing I do know is that momentum has a momentum all of its own. And so generally the trend keeps trending, but there could be a break in trend, and this could be the break in trend. And we'll know by the end of the week, right? If we're seeing weekly, daily highs on risk assets and these other, names, then maybe that is a continuation of a longer term bull run. But I do think there are a lot of reasons and a lot of indicators that do show that like something is freaking wrong or weird. Even just go back to the 10-year. Like, if we go to this, so this is actually a good sign. So this is the inversion of the yield curve, which actually began to disinvert or reinvert, I guess, whatever, around June 25th. And so peak inversion was 625.23. And I mean peak, because if we go to all time, like, I think that is peak inversion. Yeah. At least going back to the data we have here, this is probably just the opener. Is that peak? Let's see. Yeah. So anyway, peak inversion was in June, and now it's been recovering, which is a good thing. We want I guess we want this number to be positive is the idea. And that signals that we're in like a healthy economy. And when it's negative, like it is now, that signals that things are going to be dicey. So it's actually peaking in March of 2021. And that was like a really healthy economy. And right after, like, that must have been stimulus, or what was that? Something caused this run up from January 2021 into that first Q1, the end of that Q1. So we're up quite a bit, actually. Wow. So that's kind of a conflicting signal. As GDT told us in the beginning, are we not at all-time highs? Okay, so we are not at all-time highs. Wait, that's like a really long time period. Okay. We're back to like, yeah, that is relative for our operating time, that we're at all-time highs. So, or at least back to, I'll say, because it looks like we're here. No, look at that. We just peaked above. Boom. So that's signaling something. That's signaling something. What is this signaling? GDT says that it's signaling that people think that maybe there will be a resurgence in inflation and that the Fed will have to take their measures, whatever they are, to combat that, which could be possible. I don't know. Like, what is inflation? What is inflation? I understand that like eggs cost more. Once you get a company to know that a consumer is willing to pay this much more for their product, that's it. Like, yeah, you're never going to put that cat back in the bag, right? So like, it seems like as soon as you inflate ever once, that's kind of it. Like, what are you going to do about it? You know, you can kind of like fight inflation or whatever, and I'm not even pretending to understand it fully, but I'm just saying, like, if I'm Coca-Cola and I found out I can charge $2 instead of $1.75, why am I not going to charge? I'm going to charge $2 as long as they keep paying it. So that's my thought on inflation, is like some part of it has to be baked in forever, just like as a fact now. What else? Do we have anything else to cover? The dark pool. This, I don't know how to interpret this. So look at this. We get $170 million of premium. So like 200x or 100x actually, anyway, you know, of the NVIDIA guy is going into Tesla, right into close. So what is it? What does it mean? Like, is that bearish? I don't know, because the same thing happened to NVIDIA, basically right into close, but way more premium. 500 million, $500 million going into NVIDIA right into close. Holy shit, and another over $1 billion. 4D6 level. Wow. I don't think I've seen that before. Over $1 billion going into one company. This is all today. So who knows? Maybe it's a reversal. Maybe it's a continuation of a longer term bull trend, or maybe it is a spring back. But like, if there was going to be fear into the Fed, see, this is what's so interesting about like learning and trying to like understand all these indicators. If people were afraid of an outcome from interest rates, and that's why the 10-year was rising, then why would the action be so relatively bullish? And I don't know if you could actually say that it was, because if you look at the tape for the day, like just like the actual order flow, let's just look at it here. Well, I'll switch. So yeah, the actual order flow was bearish. Yes, bearish. Now, not strong bear, I would say, but look at these puts into close. So that's like hedging. I don't know. It's impossible to know, but pretty good size premium on those. So yeah, it'll be interesting to see throughout the week. What I am going to be interested to continue looking at um, is like this kind of stuff. Look at this bar on Coinbase. That is somebody taking a position. 73. Boom. That's awesome. Uh, yeah, like, is it a risk on or risk off? I don't know. I have no idea. But I do know that these companies are like historic lows relative to their potential and especially relative to their IPO price. But you also have to consider that market conditions are completely different. And so, of course, their price is different. Now, the question is, will market conditions ever in the future return to what they were at their IPO price? And that seems like a yes. What is the timescale here? To me, anyway. Like other people would say no. So yeah, like this is the kind of stuff that really I don't like to see this at all, because that's such a clear story. Look at, like, what a shitty way to end the day. Sorry, Coinbase chart. I didn't mean that. You did a good fight today. You did a good fight. What'd they do? What did they do? Oh, 2.86%. That's great. That's great. I didn't mean to shit on you. So what were we at? Just to tell the story of what I see anyway. 5 p.m. No, what? Anyway, I guess, yeah. But whatever. Let's just look at the colors and the lines. So we are kind of like around here, just going up and down, up and down. There's this giant bar up, which gets rejected where? 75.69. 75.69. And then you get like this strong selling pressure down. But then, like, this is going into close. You have like this kind of like battle where you're like going up, up, up. You get the selling pressure up, 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 or rising, rising, rising. And then this is the culmination of all the day's efforts right into close. And they push, 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 push. But that candle, look at it. It gets chopped in half. Look at that. Let's zoom in. Chopped in half. You know this candle wanted to be 5 times longer with a freaking long wick too. You know it wanted to be. But the sellers come in with this red candle and fucking just bring it right back down. And so that shows that there was a effort to penetrate and a hard rejection. Now, what are we talking about? $1? Like, what is it? 76 to 70, it's like 50 cents. Yeah, so like the scale here is like, this is a little bit silly, but just taking it as an exercise, because this would apply at like a month term where it would be more significant. But like the pattern is still so interesting to me. I mean, it really is irrelevant here because like the scale is so small. But the point remains that like in any period of time, you're having this buying pressure and this selling pressure. And it's a war, right? And the line is wherever we're currently fighting at, which is, like not a ton of lines here. This is just like growth or whatever. But like if we zoom out, we'll be able to see some lines, some horizontal levels. And so, but here's kind of one. But the point is, like, if you just look at it, it's clearly, very clearly that we test this low and then we have a higher high that triggers this run. The sellers can't get the run down. Boom, 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 boom. But then all of that give back. Oh, that's disappointing. So that is still just like a microcosm of this stuff is whatever the action is tomorrow. I bet if it's bullish, it's going to be super bullish. You want to know why? It's because we just tested this downward consolidation. Like if this low doesn't get penetrated, what is it, 75.24? If they never break past into 23, then boom, that is going to be like, because we just tested this ground. So everyone's going to feel safe here. Now, I'm talking about 50 cents. I'm more talking about like the pattern. Like, let's say this was $50 after like a long, like 3-month decline or whatever. the reason why the snapback happened so quickly is because we just barely tested those levels. And then the price action now though does a little bit become more difficult in it just depends on what if there's buyers or not. So yeah. And all this stuff you could learn about it. And so like with the 200-day moving average, of course you should have a buying program triggered at the 200-day moving average. Now you should have another selling program triggered for when you penetrate and then you stay below. And like when you penetrate these levels, that's a trap. And when you penetrate above them, that's a floor. But then as soon as you're trying to push off that floor, that previous level, that's still a trap. And so you got to punch through to get out of the cage or whatever, to break through into the next price level. And so that's what's interesting about like getting to look at the history, is knowing where you've been can maybe show you more about where you are. And so, yeah, I think that's about the 30th time I said that on this episode. Hopefully you get the point. Let's do one more tape and then we'll go. Tesla tape, kind of bullish. Nvidia tape, pretty freaking bullish. Coinbase tape, pretty bullish. ARC tape, I would say bullish, because this was one of the biggest, whatever's of the day, prints of the day. So what are people buying and calling? We kind of got some longer term puts here. We got till October 45. That makes sense. That's a good one. $1.20. Yeah, this is interesting. Oh, this is same day. Oh, well, yeah, this is what I'm talking about. Like this, they made a ton of money on this. Where did it end? It almost would be worth looking it up. Let's just look it up. Let's see how much money they made. I'll be fast. Boom. ARC. Network connection slow. So yeah, like the question is, are we in a continuation of a long-term bull trend? And this is like moving back into that after a pullback, or are we really in a long-term bear trend that is going to even go lower? I mean, break that 200-day, right? Well, I'll sell with you, right? We go by the order flow. I think we're in a bull trend. Yeah, like, I mean, I wish I would have thought that earlier. But, so what did they strike it at? 41.5. What? How can that be? They bought it at 40.50. Price is 57 cents. That must be, I'm like not seeing something. Am I confused? Strike is 41.5. Well, like it lost money, but they bought it at a lower cost. So that could just be theta decay. Could that just be theta decay? Holy shit. Let's look at the actual chart. I mean, I'm not crazy, right? Like this says, when did we buy? Spot was what? 40.87. Bought at 0.57. What time? 10 a.m. Let's see. Yeah, this is not reporting, I think, probably accurate. The price I'm getting for that is 36 cents, which means he would have doubled. Huh. Anyway, I don't know what that is about. Unless I'm misreading something. Bye. Call. So anyway, yeah, like I think it's probably macro is bullish, but if inflation is rising, what are they going to do about it? Like the only thing to do is what? Like companies are going to charge as much money as they possibly can. And okay, so what are they going to do about it? They're actually going to pull the economy back and into a recession through tightening the monetary policy by raising interest rates. But that's what they're already doing. So like, but what, yeah, like this is what I want to know is like what the markets think or whatever with the bears. Like, even if they were going to like 9% or whatever, does that mean that Tesla stops making cars? Like, I get it. Like, it's anyway, I don't know. Unless they're super geniuses with like math and everything, they've figured out like, oh, the free interest rate with this affects the contract price with that, and I can do an arbitrage with the derivative, whatever. Like, uh, first of all, with options contracts, you got to be like in and out or have a system. With regular stocks, like these are pretty historic low prices. I've gone through the chart. I don't have to go through again, but I'm looking at companies that I could have bought for, I would have had to pay more money 5 years ago, like Disney, for example, which I think actually also had bearish action. Let's look at Disney. Yeah, super bearish. So like that's so funny. Maybe like people have a really good reason to be bearish on Disney. I don't know, because these are real puts. Like that's real bearish action. I wonder what that is about. You want to know, I wonder if it could be about is something technical. So if we go and look at Disney just real quick, and then we really are done. I gotta go. We all gotta go, right? Disney. So I wonder if we're at a technical level and they're looking at things. Wow, see, that's what I'm talking about. Okay, so where are we? So we are, wow, we're below this Bollinger Band. We're below the Bollinger Band of 2016 in March. So the lower end of the probability, that's what this band is, probably. Yeah, I don't know, probably. That's what the band says. That's what a Bollinger Band sounds like, probably. Okay, so. See, look at this. We have this long shoot up, ride down that widens the probability band. It's like it's set by like price and volatility, historically, all this stuff. But like it's pretty great that we get to just have all these nice charts all, presented for us. So we were looking at the price level with Disney and why somebody might be putting it heavily. Well, if they can break through this price level, this is what I'm talking about with revisiting old prices. If they break through here, look, we're at the bottom of all this chop. So this is all chop. Want to know why is chop, especially above 123, is because it's untested in all the price history of a company that's 1,000 years old. Started in 1968. Pretty old. Managed to get to $90 until about 2015, and now we are at that same level around then 2015. And so maybe that there could be a technical person who's looking at it and just being like, I wonder if it can go lower. I don't know, because you'd wonder like I'm sure people aren't making bets of that size on technical decisions. But if you just look at this, like that's a lot firmer. See, if you go back in history, we got all the way back to 98 with this, 98. So 98 is like $45, $50. You can be real comfortable buying Disney at $50, I think. I think you can be pretty comfortable with $80. But I'll tell you this, if they did break through to like 79, I would not be buying the dip. I would be waiting until, I would be looking through the history and finding like, where do we have support? Where do we have resistance? Like right here, let's look. So the floor here, we're already below the floor. Oh no, low was 79.09. Okay, so that's the low until, a long time. When was that? 79.09? March of 2020. That was pandemic? Really? I thought we just traded there. Okay, so I guess Disney in the pandemic traded down to 79.09, and they are basically there now. They're like a couple of bucks off. That's crazy. And so look at this. This is weak. Look at this weak fucking shit. Sorry guys to swear, But like for real, look at this. This is weak shit. So the story here, just look at the sag of the, bands. So we have this bull run up after the pandemic. When is this? Yeah. Post-pandemic. This is actually when Disney introduces streaming. We, gap and then have a little gap party. And there seems to be like a strangely strong, connection here and here. 150 to 175. A lot of this, I think, with untested ground has to just be psychological levels, like things in fives, things in zeros, that kind of stuff. But yeah, so we have a pretty clear level here. What is this? 150. So anyway, like we trade a little bit above that, but then Disney starts trading down and we get this. So we get all this hype from the streaming post 135. That's kind of what I would expect Disney to be like more trading close to. I don't know. Look at this. The one way to look at that is this weak or is this really just consolidation? Maybe it's consolidation. What will become weakness is if we penetrate 79.09, which I swear we did. Like, what's the low candle here? I swear we had a lower candle. Maybe it would be visible on a daily. Let's see. That is low. Nah, I guess not. Huh. So, wait, what's this? Oh, that's the same candle. Well, anyway, I guess we have not visited that low. So if we break below $80 on Disney, then like almost for sure that's going to trigger something, some algorithm somewhere, and they're going to try to get to where would they go? $80? I don't know. Like it was just like this long climb. Maybe there's really strong resistance at $80 and it'll be a consolidation zone. Might be a good time to pick up Disney long actually. Because we're not going to get to $50. That's not going to happen. I mean, we'd have to break through all of this. Like it seems so much harder to break through than this. Like anything that's like, well, yeah, you could just smack it over. This is like, what is that? A decade? That's 4 years still. Like that's a long increase. So yeah, that's looking at charts time with me, your host, Caleb. And you've been hanging out with us in GDT. And hope you guys have enjoyed it and learned something. If not, then I guess, I think it's your fault actually. There was one other thing to show you. And then we'll go. I'll go. Look at this call somebody made on ARC today. This is like my style. This is what I would do. I haven't done it, but I would like to. 2,000 calls of 3 cents into what? September 15th. What's the strike? 53. They are literally just betting that ARC is going to gap up and that's going to triple and they're going to do it again the next day is what I think. I don't know. That's one way to trade the market. I don't know if that's what's going on, but I'm going to highlight these things as I find them, maybe try to play them once in a while, share all that with you guys. Hope you find that valuable. And in the future, the idea is to create some fun mechanisms that involve trading for me as a way to sponsor this show, because I am an unemployed actor. The acting part is that I'm unemployed, but and also that I'm an actor. Okay. All right. See you guys. Have a good night.